Researchers gave 8 of the world's most powerful AI models $10,000 each and told them to trade. They ran the experiment 32 times. You know how many times the AI finished in profit? 6. And yet, Robinhood just officially opened their platform to let AI agents trade your real money. eToro did it. Public.com did it. Every major brokerage is doing it right now. So either they know something the researchers don't, or retail traders are about to learn a very expensive lesson. By the end of this video, you'll know exactly how to use these tools, and more importantly, how not to use them, because there's a very specific way to get this right. Here's what actually happened. In May 2026, Robinhood launched something called Agentic trading. You connect ChatGPT, Claude, or Cursor directly to your brokerage account, and it trades on your behalf. Real money, real orders, no human in the loop. eToro launched AI agent portfolios powered by Grok. Public.com went further. Type plain English, it executes trades across stocks, crypto, bonds, all of it. This isn't a roadmap slide from a conference deck. This is live, right now. Basically, the dream of every retail trader who's watched one too many YouTube tutorials is finally real. You can now lose money faster than ever, but at least you won't have to be awake for it. But before you go connecting ChatGPT to your life savings, you need to understand what's actually going on under the hood. Because it is both more impressive and more terrifying than the headlines suggest. Your old trading bot was basically a toaster. Now, you might be thinking, isn't this just a trading bot with better marketing? Fair. Let's actually address that. The bots most people picture are static rule machines. RSI drops to 30, buy. RSI hits 70, sell. That's the entire brain. They can't read a news headline. They can't process a Fed press conference. They can't adapt to anything they weren't explicitly programmed for. And if a market crash happens, the bot keeps buying, cheerfully, automatically, until a human developer manually shuts it off and rewrites the code. AI agents are structurally different. They reason, they read sentiment, they adjust strategy in real time, and they operate less like a single script and more like a mini trading desk with specialized roles handling data, analysis, risk, execution, and auditing separately. The old bot is like a vending machine that only accepts exact change. The AI agent is like a junior analyst who reads the Financial Times, watches CNBC, and is deeply, pathologically afraid of losing your money. Okay, so the tech is genuinely new, but does that mean it actually works? This is where things get uncomfortable. The lab gave AI $10,000. The results were brutal. Let's go back to that number. 6 out of 32. That came from a research lab called No One. They just raised $15 million specifically to test whether AI can actually trade, not simulate, not backtest on clean historical data, live capital, real derivatives market, real risk. 8 frontier models, $10,000 each, 32 runs. The instruction was simple: maximize profit. 26 failures. And they weren't close calls. Here's why. 3 specific flaws kept showing up. First, these models love to gamble. They have what the researchers called an excessive penchant for short-term speculative bets. They chase, they overcommit. They behave less like analysts and more like someone who just discovered options trading. Second, they're bizarrely sensitive to prompt wording. Change one word in your instruction and the entire strategy shifts. That's not a tool you can trust with a live account. Third, they consistently underestimate fees and slippage, which is the financial equivalent of planning a road trip and forgetting to budget for gas. Basically, the CIO of the firm said generic AI models can't sustain sustainable returns without purpose-built training, which is a very polished way of saying, don't let ChatGPT near your red money. So Robinhood knows this data exists, the researchers know, and they launched it anyway. Let me show you exactly why and what that means for you. The conflict of interest nobody talks about. Here's the part the launch announcements left out. Robinhood makes money from trading volume, specifically payment for order flow. Every time an order gets placed, they earn. It doesn't matter if you profit. It doesn't matter if you lose. The more your agent trades, the more they make. Amanda Fischer, policy director at Better Markets, flagged this directly. Typical retail investors don't benefit from higher trading frequency. Brokerages absolutely do. And then there's the fine print. Robinhood, eToro, and Public.com all officially state they do not supervise, recommend, or audit any AI agent connected to their platform. If the AI blows up your account, that's 100% your loss. No recourse, no appeal. Now here's the one that really matters. When you connect ChatGPT or Claude to Robinhood, your account numbers, your balances, your positions, your full transaction history, all of it leaves Robinhood's secure servers and routes into OpenAI's or Anthropic's environment, subject to their privacy policies, their security infrastructure, not yours. Only 21% of firms have mature governance for agentic AI. The other 79 are doing what I can only describe as vibes-based risk management. Okay, you've heard the risks. Now, here's what actually responsible use looks like. Because these tools aren't useless, you're just being sold the wrong version of them. How to actually use these without getting wrecked. Okay, so here's what responsible use actually looks like. 3 rules. These are non-negotiable. Rule 1, never let the agent execute alone. Use it as your research brain, not your trigger finger. Let it scan sentiment, pull earnings transcripts, flag sector concentration risk, identify setups. Then you approve the trade. The AI does the legwork, the human makes the call. That's the model. Rule 2, use the isolation features they were designed for. Robinhood's Agentic trading account is completely separate from your main portfolio. That's intentional. Keep it that way. Only move in capital you can afford to lose entirely. If that number makes you uncomfortable, the account stays empty. And rule 3, this one is specific and it actually comes from the research. Build a cognitive filter into your prompts. Require the agent to cite 3 separate supporting indicators before it recommends a trade. Force it to write out its reasoning. What's the thesis? What's the risk? What's the exit? That single constraint dramatically improves outcomes because it forces the model to filter out low-probability setups instead of chasing noise. Now, depending on where you're coming from, this looks slightly different. If you're not a coder, you don't need to be. Public.com takes plain English. Type what you want, it builds the workflow. No API keys, no terminal. If you came here looking for passive income, reframe it. This is your AI research intern, not your fund manager. It does the reading so you don't have to. You still make the decisions. And if you're an intermediate trader, use this to backtest ideas 10 times faster. Let the agent stress test your thesis against historical data before you risk capital. That alone is worth it. And if you do all of that, here's what this actually looks like in practice on each platform. Here's the honest verdict. The technology is real. The hype is also real. And right now, the hype is running about 18 months ahead of the actual performance. These tools are genuinely powerful as research assistants and strategy validators. They are not passive income machines. Not yet. The traders who will win with this are the ones who treat AI as their junior analyst, not their portfolio manager. The ones who hand it the wheel are going to get a very expensive education. And if you want to see me actually run one of these agents live, $500, real account, every trade documented, that video is next. It gets messy. Link's right there.